Forget everything you thought you knew about the AI ceiling because NVIDIA just shattered it with their Q4 fiscal year 2026 results. We are officially entering the age of agentic AI, and the numbers behind this shift are absolutely staggering. We're looking at a massive beat, record-breaking buybacks, and the start of the next great compute cycle. Today we're breaking down the blueprint of this historic performance. We'll unpack the headline numbers, analyze the explosive growth in data center and networking, and look toward the horizon to discuss the Rubin era and the potential risks like China export controls and power limits that could break the thesis. The headline is simple. This was a historic beat and raise. Revenue hit $68.1 billion, up 73% year over year. Gross margins reached 75.2%, while non-GAAP EPS surged 82% to $1.62. The key takeaway, the transition to agentic AI is rapidly accelerating demand for Blackwell infrastructure. When you put these numbers against Wall Street's expectations, it's a clean sweep. Total revenue, gross margin, adjusted EBITDA of approximately $47.5 billion, and GAAP net income of nearly $43 billion all came in as a definitive beat. NVIDIA isn't just growing, it's consistently outperforming the highest expectations. Check out this operating leverage wedge. While full-year revenue skyrocketed 65% to over $215 billion, earnings per share grew even faster at 82% in Q4. Strategic cost management combined with a favorable Blackwell product mix is expanding profitability at a breathtaking pace. NVIDIA's business has transformed. The data center is now the primary unit of computing. Data center revenue reached $62.3 billion, dwarfing everything else with 75% growth. While gaming, ProViz, and auto are all growing, they are now supporting acts to the massive AI infrastructure engine. Networking has become a standalone powerhouse, bringing in $11 billion this quarter, a 263% increase year over year. It's now exceeding a $31 billion annual run rate and has grown 10 times since the mellanox acquisition. NVIDIA isn't just selling chips anymore, they are wiring the entire AI ecosystem. Geopolitics are shifting the map. Non-US revenue dropped from 41% to 31% this year because US export controls mean NVIDIA expects zero data center compute revenue from China in their current guidance. However, massive domestic demand from hyperscalers is completely absorbing that loss. NVIDIA's cash generation is flawless. They ended the year with $97 billion in free cash flow and $62.6 billion in total liquidity. Importantly, their $101 billion in net income is heavily backed by $101 billion in operating cash flow, which means these earnings are high quality and real. What do they do with all that cash? They give it back. NVIDIA returned over $41 billion to shareholders in FY26, with $40 billion of that coming through share repurchases. They are aggressively using their cash pile to absorb dilution and support the stock price. So what's next? Q1 FY27 guidance is already pointing to $78 billion in revenue, but the real excitement is the Rubin platform, on track for the second half of FY27. Rubin is designed to deliver a 10 times reduction in cost per token compared to Blackwell, starting the next massive compute cycle. Of course, every thesis has risks. Physical power constraints are becoming a bottleneck for $700 billion capex hyperscale. We also have to watch stock-based compensation hits and continued geopolitical foreclosure from China or new global AI licensing acts that could cap the market. The analyst verdict is a battle between two cases. The bull case sees agentic AI driving a massive second wave of demand as we move from chatbots to autonomous agents. The bear case worries that demand will eventually outpace the physical world's ability to provide power. For now, the financial velocity outweighs the constraints. If you remember three things, let it be these. First, growth is accelerating with the Blackwell cycle just beginning. Second, networking is a $31 billion juggernaut that proves NVIDIA owns the data center. And third, cash is king, with $97 billion in free cash flow funding the future. If you found this NVIDIA earnings deep dive helpful, don't forget to like, save, and share this video. Follow and subscribe to ZinvestZ for more smart investing insights. Thanks for tuning in.